Fundsupermart.com.
Okay, hi Mike. The recent global threats for Ebola in West Africa have already impacted many markets around the world and could increasingly threaten already low global economic activity. What will be the outlook of US global equities in the near future?
Well, obviously the Ebola situation is very unfortunate, but in terms of things for the long-term investor, it's really hard for us to have that play a role in our long-term investment thinking. For the U.S. and the global investor, what we are seeing is good opportunities. I'd say the U.S. market looks to us like it's priced at a relatively similar level to long-term averages, and therefore the expectation should be somewhat that it trades relatively close to long-term expected returns, which are around 8 to 10%. We hope to do a little bit better than that, but that's our approach. In terms of the global outlook, again, stocks in some of the global markets are a little bit less expensive from a multiple basis, and there is a wider range of outcomes because of some of the uncertainty of some of the global economies, but generally speaking, it looks very favorable.
In addition to that, will the recent congressional midterm elections play a role in affecting the funds?
Well, the midterm elections, which just occurred, in which the Republicans took control of the Senate, don't really have an impact, again, on our long-term thinking, because what we're trying to do, and we invest in a company, is look out over 5 years plus. And so when you think about election cycles, they're actually much shorter than that. So for us, we don't want to rely on policy changes, on things of that nature to make our investment decisions. We're really focused on what would a rational buyer with cash in their pocket pay to own the entire company if they could do so today. We want to buy at a discount to that number. We want to make sure intrinsic business value is growing, and we want to make sure that we're invested with the right management teams. That is something that you can think about over very long periods of time without getting kind of sucked into the daily news flow, which might interfere with your long-term value thinking.
US equities have been bridging new highs after the recent correction. Is US equities still poised for further gains?
Yes, I think the US equity market still looks attractive. So when you look at it on a multiple basis, again, the S&P 500 is trading at around 15.5 times earnings. It's very close to the long-term average. And as I've said, the returns on the long term from that 15 times multiple are 8 to 10%. So that's going to be a very attractive return relative to most asset classes. The U.S. economy is on the margin improving, and we are finding plenty of ideas to invest in the U.S. market.
What opportunities do you see in the current environment, and how is the fund capturing such opportunities?
I think the main opportunity in the current market, besides just the broad opportunity that we think we're finding attractive equities, but the one area where I'd say we're finding some true cheapness, some true attractiveness, some true absolute value, which is what we're really thinking about, is in the financial area. So the financials, particularly some of the banks that we own, so think JP Morgan, think Wells Fargo, maybe Citigroup, AIG, BlackRock. We own a number of financials. When you think about a company like Wells Fargo, how do they grow their business value? Well, they grow it by increasing their customers, by increasing their deposits, and by increasing their earning assets. Basically, those numbers have all been very positive for that company. In a very low interest rate environment, it isn't necessarily reflected in their earnings how positive things have been on the earning asset side, on the deposit side, on the customer side. But over the long term, that's the way you build business value, and Wells Fargo's done a fabulous job of doing that. So that's an example of one of the financials that really is trading at a low multiple of its normalized earnings power, and we think is very attractive.
Okay, thank you, Mike.